Well, UTI AMC was one of the companies to debut on the exchanges today, and rather the company witnessed a tepid listing. The shares listed at a discount of almost 10% to the issue price of 554 rupees per share. Well, if I talk about the overall IPO, it was subscribed 2.3 times, with the retail bidding issue at remained healthy at 2.3 times, while HNI subscription did not really saw such a strong participation, with the subscriptions at 0.93 times. Well, having said that, UTI AMC is the second largest AMC in India in terms of the total AUM as of Q1 FY21. In fact, they have 10.19 million of live folios as of March 31st, 2020, and also a client base that accounts for almost 12.2% of the 90 million folios managed by the Indian mutual fund industry. Well, having said that, the weak listing particularly was on some amount of concerns that the street has. Firstly, the FY20 earnings were weak for UTI AMC, so a slight outlook on what kind of top line and bottom line growth that the company would see, and some amount of clarity on that front would definitely be a bit of a relief for the investor community and even the analysts. Well, having said that, the another aspect is the continued outflows in the AUMs that could potentially impact the revenues and the margins going forward are also some bit of a concern. If I look at the cost metrics, that are also at an elevated level compared to its peers. So the credit risk also related to the debt portfolio may expose AMCs to significant losses, and this is another aspect that is a bit of a challenge for the company and the industry as a whole. However, we did catch up with the management of UTI AMC, Imtaiyazur Rahman, wherein he mentioned that listing price or the issue price is just the starting point of the journey for them. In fact, he added that going forward, he's pretty much optimistic of the kind of growth outlook as far as this industry is concerned. He added that investors have entered considering the opportunity in the industry and also the kind of strength that UTI AMC possesses. Well, he is quite confident of the growth for the industry, and particularly when it comes to UTI AMC, he believes that they are well poised to capture on the growth opportunities. While talking about the kind of recent outflows and will that be a bit of a challenge, he said that on a sequential basis, if we look at the picture, it's definitely is on an improving trajectory. The industry grew almost 12% growth as far as their AUMs are concerned on a sequential basis. While penciling it down to UTI AMC, he mentioned that their AUM grew by almost 16% on a QoQ basis, which is definitely better than what the industry saw. The company's asset under management grew from 1.34 lakh crore to 1.55 lakh crore at the end of September quarter. In fact, the company has a wide distribution network which definitely plays in their favor, and they added that the strategy going forward would be that they would stay committed to deliver superior and consistent returns to their mutual fund investors, given that they have a deep distribution reach with strong tie-ups with national distributors and banks would definitely work in their favor. They are also fully committed to invest in digital space, particularly to track New India. Well, for their outlook on the profitability and the top line, he mentioned that they're targeting to mobilize high-yielding assets both in equity and fixed income products, and this would definitely help in improving the top line and also help them managing their cost. So going forward, he pretty much remained optimistic of the growth that may be presented to them, and he surely believes that UTI AMC is well poised to capture on that growth.